Well, David, we've seen the rand weakening slightly this morning from those opening levels, up around 7.85 at the moment. But of course, a good side better than the R8.08 we traded at last Thursday. Do you think the worst is over for the rand at this stage? Do you think we could see continued strength?
Stephen, very difficult to say as we head into the World Cup, of course. I think the one thing that for me is evident in any case is that the global woes are set to continue. I don't think we're anywhere near the sort of end of the nervousness of the recent debt crisis, and that's just going to exacerbate as the weeks and months play itself out. For the rand, however, it's a little bit of a confusing picture because we do have fairly robust growth compared to our certainly the European counterparts, and obviously positive sentiment will be spilling over from the World Cup. So the rand in a bit of an unclear picture at this point in time. But I'm not going to go out there and rush to buy rand simply because I think there's a lot of concern around the global scenario at this point.
Well, with those global woes set to continue, the volatility is probably going to continue as well. And of course, we know that the rand is usually a victim of that volatility, isn't it?
Well, we've seen very choppy markets over the last few sessions. A huge amount of volatility. The rand was trading on Friday. You mentioned 8.08 on Thursday, but we did get above 8 on Friday afternoon. Traded as high as 8.02, 8.03, and very quickly as the Dow rebounded, then the rand came back to around about 7.85. So we have a very nervous market out there, very choppy, order-driven market, and I don't think things are set to improve for a while to come.
Well, you did mention the strong growth that South Africa is showing relative to some of its European peers. We're expecting first quarter growth figures out tomorrow. The market looking for a figure of around 4.3%. What's your expectation on that front, David?
Yeah, I think recent data has supported the growth story in South Africa. I think we are doing fairly well. Interest rates have come down quite far over the last few months, and that's all going to be growth supportive. But one must remember, we do tend to lag the global economy, and of course the global economy at this point showing a little bit of signs of strain at this point, and I wouldn't be too optimistic for months down the road.
Also, consumer and producer inflation numbers coming out Wednesday and Thursday. Of course, the last reading for consumer inflation was 5.1%. Do you think we could better that for April?
Stephen, I think on the macro picture, inflation is, there's not an inflationary threat. Certainly worldwide, there's no inflationary threat. Of course, domestically, we have a little bit of a threat from wages demands and so on and so forth. But from the demand side of the economy, not very high at this point in time. Particularly, oil prices have come off very recently. So I think inflation will set to be around these levels, perhaps a touch lower in the months ahead. And who knows, perhaps the good governor will give us a surprise at one of the next MPC meetings.
Well, David, you mentioned the murky growth picture ahead, particularly coming from our main trading partner, which is the European Union. And of course, we know the euro has also stabilized slightly from its worst levels at the beginning of last week. Germany came out with an austerity program to bring its budget deficit down from 5% to 3%. But all of those austerity programs are really going to dig into growth in the European Union, and that will affect us, won't it?
Well, that's the point entirely, Stephen. As we were headed into the credit crisis of 2008, governments responded by massive spending stimulus packages, and of course those have got to be paid off sometime. It's now the focus is on Europe, and those austerity measures that are coming into Europe are certainly going to hamper growth, are going to hamper employment creation, are going to hamper tax collection, and we haven't even begun to focus on Japan and America yet, and they've got similar problems. The US, as you well know, as I've said many times in the past, they've got serious budgetary issues facing them in the next few years, if not decades. What is that going to do to global growth? And of course, the one thing that we can take from this is that interest rates around the world will remain lower for longer. That will add stimulus to sort of any riskier trades, as such carry trades. But then, of course, we're going to have periods of volatility where the global markets will become nervous. So I think volatility is here to stay for a while to come. And the confusing picture that we're seeing at this point in time is going to take some time to unravel.
Well, David, one of the local factors that could start to affect growth, I'm sure, is the strike at Transnet. That's continuing into this week with the one union, Satawu, not settling for the 11% that's on the table from Transnet. Eskom potentially also going on strike. And apart from the reputational damage this could be doing to us 2 weeks ahead of the World Cup, this could also impact on growth, couldn't it?
Well, Stephen, if one looks at the strike action over the last few months in South Africa, far from positive, I must say. Some of the man hours that have been lost, heading towards record territory, and I think from an investment portfolio, the market has kind of ignored the domestic factors up until now, heading into the World Cup. I think after the World Cup, a lot of these factors will become evident, will become market-moving factors, and I think it's just another point to be cautious about when looking at the rand.
Just going into this afternoon, we're expecting some housing data out of the US today and also continuing into the week. Existing home sales expected to have improved, but I think it appears there might have been a last-minute rush to buy properties from first-time homeowners just to get those tax credits, and those tax credits are about to wear out, aren't they?
Well, Stephen, a lot of the stimulus that was put into the system in the US and in Europe during the credit crisis, those obviously are coming to an end now. We have the cash for clunkers, the so-called cash for clunkers. We have the housing stimulus plan. I'd be surprised if the housing number was not viewed as a good one this afternoon. But the point is, the market has got new things to focus on. So I think economic data for now is in the background, and all eyes on how Europe is responding to the unfolding fiscal crisis.
And what does that mean for the rand going forward from here, David?
Yeah, I'd be surprised if we see very good strength coming out of the rand. I think we're into a new kind of range, certain 775, sort of 825 in the foreseeable future. Perhaps we get a little bit of stimulus or a little bit of positive sentiment coming out of the World Cup, but I think much of that is priced in at this point in time, and I think we're in a new sort of weaker range, as I said, 775 to 825.